Hey guys, Kimo Sabe here. Another video. This one's kind of inspired by a Camel Finance video that I heard earlier today. Here's why bears are wrong. Great channel, very inspiring material. And in that video, Camel talks about technical analysis being very subjective versus very objective. And to read the charts, we want to try to objectify as much as possible, which makes our actions and reactions more robotic than not. And the majority of technical analysis is very subjective, where you have a wave pattern and an expectation, or you have an accumulation and a distribution, certain expectation, moving averages, TD sequential. It's all history repeating, and we expect the similar outcome, and we trade that, or at least we try to. The thing that you can take your subjectivity away from technical analysis is basic trend, basic closing price, and that's how I end up doing it. So here we have the weekly Bitcoin chart. Camel was talking about getting long at the lows here as soon as price broke back into this range. That's a Wyckoff setup that works really well. But as soon as price traded up here, that is a higher high. And then you need to buy the higher low. That's the market telling you, I'm done accumulating. I'm ready to go. So there is no arguing that that closing price is higher than that closing price. You can't argue that. That's just set in stone. It's fact. There is no subjectivity to that. It's not up for interpretation. It is the truth. That is higher than that, bar none. And then what follows is that is higher than that, giving you the uptrend. And this repeats on all time frames. And what we have developed here over the span of 2 years now, going on 2 years, is higher highs, higher lows, higher high, higher low, higher high. This is our next higher low, potentially, since we didn't trade below that. And now we're making a higher high. Still waiting 2 days for this weekly to close higher high, but it looks like it's probably going to do it. But if you look internally here, the market was telling you this already on a weekly scale, how you had the low here, you had a higher high, and now you had a lower low. That low is lower than that. You cannot argue it. What followed was a lower high on closing basis. Following that, you get a lower low, another lower high, and another lower low, until right here. That closed higher than that. You cannot argue it. That is higher. So what comes next is the higher low. Higher high. This potentially is the higher low. Working on another higher high. Now we bring it to the daily. The daily has low, high, higher. This one put in a higher low and then a higher high. But then we broke that. We made equal lows there. I think this one closed ever so slightly under it. So in this downtrend, this move down, this was your last lower high to the lower low. This was higher than that. You cannot argue that. What followed next was a higher low, higher high. Put in a higher low right here, higher high, another higher high. So from that low to that low, that's still a higher high. And that's what I was saying 2 or 3 videos ago, that I may be wrong to expect lower, because that would break the uptrend. This is the spot to look for a higher low. And out of that higher low, you go into the lower time frames, like on a 4-hour, and as soon as you get a higher high, you make a higher low on a 4-hour, because that's a 4-hour downtrend, and that leads to an expansive move. So we'll get right into the 4-hour here, where you have a low, lower high, lower low, then you're in a downtrend until right here. That closed higher than that. You cannot argue that. That breaks the structure of the downtrend, giving you the potential for an uptrend to start. And it went pretty well. Out of that, higher high, higher low, higher high, higher low, higher high, higher low. Now we made a higher high. So the 4 hour is still in an uptrend. The daily is in an uptrend. Weekly is in an uptrend. So then I want to bring your attention to an idea called the alignment. So to align everything together, imagine a Formula One racer. Very fast car. Doesn't mean anything if these wheels are not aligned. So think of it like this is your weekly trend, this is your daily trend, this could be your 4 hour trend, maybe that's a 1 hour trend. Without all of those aligned, this car is not as fast as it should be and won't perform. You can get down to a 15-minute, maybe these fins would be your 15-minute if those fins are working properly, and then down to a 1-minute chart, the back fin, the spoiler working properly, gives you a streamlined machine that is set to rip. It just goes max speed when everything's in alignment. If your 4 hour is in a downtrend, well, that's a wobbly wheel, and the car's not going to perform. The daily's in a downtrend, but your weekly's in an uptrend. Well, you're waiting for your daily to align with the weekly. Then you wait for the 4 hour to align with the daily and the weekly. And then once the 1 hour aligns with them all, well, then you've got yourself a streamlined machine that's ready to move. So it'll keep moving faster and further than you would expect. It doesn't always happen, but that's the expectation out of the alignment. When that happens on the chart, the asset can move in price like a streamlined machine. So getting back to the 4 hour chart here, it's still in an uptrend. It's either waiting to find a 1 hour uptrend, 1 hour higher high, 1 hour lower low, or a 15-minute higher high to a 15-minute higher low to continue its uptrend, or it wants to break down to here and close a 4 hour down here. If it closes a 4 hour lower low, then you could look to sell the lower high. Until then, there's no reason to short the market because it's not telling you to short the market yet. You can have divergences. You can have whatever indicator oscillator that tells you, oh, this is a sell area. Oh, there's resistance or whatever. There is no resistance. There is no second best. There's no second best. This thing is just going up. So there's no resistance above price, only manufactured resistance from people taking profits or traders taking profits, and the market makers allowing for shorts to come in, and then they liquidate them more. How far does this go? I don't know. I'm not going to dictate that. But what the market tells me is I want a higher high, I want a higher low. And if we zoom into current price, we can actually measure the trend. From this high, how much higher was that high? It was that much higher. So we'll take that and we'll project it from the low. Where'd you find the next low? That much higher than the previous low. Do the same thing from up here. How much higher was that high? It was that much higher. Projected from that low. Look how much higher that low is. There's an algorithm that is saying we made it that high, that's where you buy. And if you want to be have a statistical probability of trading, that's where you need to look for a trend to continue. If the trend breaks down, you might have a final buy here to protect this low on a 4 hour basis. But if that closes lower, then you sell the lower high. The algorithm should be switched to sell the lower high. So a lot of traders are thinking like, where's my pullback? This thing has went too far, too fast. Where's my pullback? Where's my entry? I want my entry. Give me my next little 3-wave pullback so that I can enter. When you realize that's entering a downtrend, then you're in a downtrend. Then you need to restart the uptrend from your 3-wave move. Does the market give that to you? Maybe. Does it just continue up and leave anybody waiting for this behind? Also just as probabilistic that it'll happen. Right now the market is not saying pullback until you close a lower low. Then you sell the lower high. Then you get the lower low. And then you see where trend is going to stop out at. Because this thing can then keep going lower and lower, squeeze everybody out, and then go. So is the market going to give you the exact pullback you want? No, for the most part. It gives you really crappy pullbacks to get into. It gives you opportunities that you don't want. Like this, 3-wave back, and there it goes. And then it stabs you out, and people panicked here. And I'm like, hey, the trend is still up. Look at closing price there, closing price there, closing price there. And price resumed up. Daily trend gave it to you right here. That's a higher high. This is still a higher low. Now you made a higher high. So on the daily trend, from that high to that high, if you do look for an opportunity, where to expect it. If this tops out here, measure from there to there, project from the low, there's where you should find your daily higher low, around 70K, if price wants to go in there. Certainly doesn't have to go there. I don't think you're going to get a pullback that you want. I think it's going to look ugly if you do get it, and you're not going to want to buy it. It's kind of the way it usually works. I kind of think of the market maker or the market like they're just going to give you the perfect entry on a silver platter. Like, here you are, sir. Take my money, please. This money is for you. Here's your 3-wave pullback. You can now have my money. In all likelihood, they say, here, take my money. Then they bounce it up, and then they take you out. And then they do a lockout move again. It's the way the markets operate. They're not in the business of just giving you money. They're in the business of making you work for it. And it is work. And it's probably time to put your head down and go to work. For now, higher highs, higher lows. Trend still intact. 15-minute chart. You are making a lower low there. There's your last low. Now you made a lower low. Potentially you get a lower high and push down. Or you just start making higher highs and higher lows and break the top again and continue the 4-hour trend. I am seeing a pattern here that may be repeating. So let's draw it out. I'm seeing this looking like that. Kind of doing that move. And this move down, this move down. Into this move maybe. Then you repeat this move to grab some liquidity. And that would be your pullback. That's your ABC pullback. And then out of there, you start this move and there. Boom, boom. That is assuming the 4-hour can maintain a higher high, higher low. Though this, I think, is going to close lower than that. If this pattern does play, then you have to wait for a small uptrend to start after grabbing liquidity, probably down to 74,300 and taking this out. Once you take that out and you get a bounce, your stop loss has to be there, because if you get stopped out after grabbing that liquidity, you're targeting that liquidity down there. So hopefully it maintains above previous all-time high, maintains above that 74,000 area that Camel Finance was talking about, and you can continue pushing up. So that's definitely something to watch for, is your ABC pullback to be like that, taking this liquidity before pushing up. and this would potentially be your wave 4. Your wave 5 takes you up to 80, I think 83,000, I think was my measurement that I had on there. So that's definitely something to watch for. Watch your trend. You can take trades as low as the 15-minute. I found the 15-minute fairly reliable on this asset. May not work for other ones. But right here, you took all that liquidity right there. So you stop there, and now you're kind of making a triangle compression. So maybe you break out the top and take out the highs again, and then from there take out the lows, and then you can resume. But no trade on a 15-minute until you close a higher high above there. And then if you break the low, then you need to close a higher high above there. Close a higher high above there, probably take it at the daily open and take it up. First take profit is a break of that high. Take 25%, 50%. I'd probably take half off, since I am kind of expecting this pattern to play, but that doesn't mean it has to. But yeah, I'd close some profit and then look to get stopped out if that move does come down here and grab this liquidity. That would be a really nasty wave 4. It might look like this. It might actually look a little bit larger. Be some kind of expanded flat, getting back down to this area. Regardless, you have to watch for an uptrend to start. Just like any of these moves. You had to move down. This made a lower low, made a high low. This was your lower low. That's where the selling came in. And then you made a higher low right there. You pushed up for a higher high. Now you broke above that. And then came into a higher low, higher high. This is your higher low. Maybe grab liquidity, back up, and take it up. Watch your trend on whatever time frame you're trading. It works on all time frames. You can get this down to the 1-minute chart and trade a 1-minute trend. And as soon as the trend reverses, get out of the trade. But anybody who's short or holding a short from anywhere lower that did not get stopped out, they're being stubborn. Just like longs, anybody who's long that's going to get stopped out, wherever their stop is. If your stop is right there and you get stopped out, don't be stubborn. Wait for an uptrend to start and then get back in. Then put your stop loss there. You get stopped out again. It is what it is. It's part of the game. So, hope that was helpful. Let's see if we get a pullback. But a pullback does not start until you make a 4-hour lower low close. That's the opportunity you might have to get a pullback. But if you pull back there and break above the high, you're going much higher. And then you have the alignment and you're going to run. So hope that was helpful. Keep your stops tight and have a good night.